So this is
Okay.
2.1, which is actually talking about market structure. There is nothing you will do in Forex trading if you don't understand the market structure. You will always trade against the direction of the market. And once you can understand the market structure, irrespective of any strategy you are using, either you are using SMC, either you are using trend line, either you are using resistance and support, once you understand the market structure, you will be able to trade in direction of the market, and which your winning trade will always be more than your losing trade. It's not as if you will not be having a losing trade, but definitely your winning ratio will be higher than your losing ratio. You will only be having losing trades in those places that the market tends to change the direction where it's actually going. For example, the market is creating higher high, higher high, higher high. At a point in time, you will be waiting for the market to return back to the base where you want to buy. So you might be having a buy limit at that zone, which markets might invalidate that zone, which that is the area we will be considering as change of character. Did you get the point now?
Yes, sir.
Yeah. So in places like that, losing trades will be coming. So in places like that, losing trades will be coming up. So for the overall, your winning will always be more than your losing. And you'll be able to understand where market is actually heading to. So in this market structure, we have three types of phases. We have the consolidation, which some people always regards to as ranging market. We have consolidation, we have the uptrend, and we have the downtrend. The consolidation market is the ranging phase of the market, where market is just moving within the same range. It's not breaking higher, it's not breaking lower. And we have the uptrend, where market is creating the higher highs, higher highs, higher highs. And we have the downtrend, where the market is creating lower lows, lower lows, lower lows, lowers that are lower than the previous low. So the 2.1 is saying the bullish market is characterized by making higher highs, like I just explained, and higher lows. But this characterization is not enough. It is necessary to say not enough. It is necessary to say that bullish markets are always breaking swing highs and respecting swing lows. So at the point where it fails to respect the swing low, that is where we are having a change of character, like, oh, this market is planning to change from being bullish to bearish. Vice versa, the same thing happens in a bearish market. When the market is making a swing low and respecting the highs. So let's say, I said the fact that the price has broken a swing high indicates that the higher price should be expected. So it is negotiated in the trend in which the market structure was broken. This is an example. Now, we have this move, and we have this move, okay? This is the high, and this is the low, right? At this point, the market moves up again and break this high, okay? And give us higher high, which is higher than this, right? And this place will become higher low. which is higher than this low. Now, when the market is coming down, it respected this low. It does not take out this low. Okay. So when it respected this low, then it's telling us that another higher high will be coming up, which is going to be higher than this. So at this point, once this is respected, at this point, we will be looking for opportunity to buy, then above this high. Then it continues that way to this level, okay, again. Now, at this point, it will come down again, still respect this higher low, okay? Then we'll be looking for an opportunity to buy from here to come and take out this again. So this is the way it will keep moving. That's the way it will keep going. That's the way it will keep going. I don't know, did you understand that simple illustration I just did now?
Yes, yes.
Yes,
Okay.
I understand.
Yeah, fine. So let's move ahead from here now. So note, the price is breaking the higher high only after a BMS, the price retraces back to 50% OTE of the fib level, right? Then LRB, low risk buy. So at this point, when you know, like there was a time I told you that all these grammars are just
okay. Yeah.
A lot of people just come up with
Just
different grammar.
yes.
Yeah,
That's
so
true. That's true.
so to me, I can say return to the like they say low risk buy. It means that if you are buying at this zone, your risk is you are taking a low risk.
Okay.
Compared to when you are buying at this zone. For instance, somebody that is buying at this zone now, you know, is high risk because
Yeah,
once the market break this structure, and you are buying at this level, you should remember that there will always be a return back to come and respect this low before moving. So if I am buying at this zone now, immediately the market break this zone, then I started buying, okay? Meaning that I will be having my stop loss somewhere here. And you that you are waiting to buy from here, meaning that you'll be having your stop loss, let's say somewhere here as well. You are buying from here, your stop loss is here. I'm buying from here, my stop loss is here. You are on the low risk, I am on the high risk. Did you get the points now?
Yes, sir.
So whenever the market has just broken one high, don't make attempt to buy at that zone. Always wait for the market to pull back before you buy. Now they are saying after a BMS, this is a BMS now. This is a BMS now. Some people call it BOS, break of structure. Some people call it break of market structure. That's BMS. Some people will just say break of structure. So it's still the same thing. When you see BMS, when you see BOS, it's still the same thing. So they said at the break of every BOS or BMS, the markets reverse back to 50% of the Fibonacci retracement. I will still talk about fib. So but let's take it a step after the other. So it's retraced back to a certain level, then it continues the bullish movement. So that is bullish condition. That's the uptrend. That is what we regard as the uptrend when the market is breaking structure to the upside. Now, this is the example of it in a chart now. This is the example of it in a chart. You can see this. You can see how the market is breaking higher highs at each of these breaking, the markets reverse back to a certain level, move again to break another high, reverse back to a certain level, move again to break another high, reverse back to a certain level, move again to break another high. This is a bullish condition. That is an uptrend. That is an uptrend. Let me share GU charts. Let's see example of what we just talked about now. Can you see my charts?
Yes, I
Yes,
can
sir.
see your charts.
Okay, fine. I'm looking for a perfect trend that is going up. Okay, fine. So from here now, good. From here now, we have a perfect chart that is going up. Let's look at it on 4 hours. Perfect. Perfect. This is a trend. Back to this base. Here. Back to this base. Here. Now, we have what here?
Break of market structure.
Break of market structure. Okay. And they were saying markets return to what?
To 50%.
To 50%. What happened at 50% here?
It will
The markets reverse back
reverse.
and break this structure. Right?
Yes.
Again, from here to here, what happened? The markets reverse back below 50% again.
And reverse to break the structure.
And move up again. And move up again, break the structure. Right? Then, this same market again did what? Move from here to this zone. It didn't get to 50%. It moves up again. In cases like this, which means we don't have a setup, right? But again, break another structure here to the upside here. Then what do we have again? From this place, it moves to here. What happened? It get to the 50% again, right? Then it moves here to break another structure, right?
Yes.
Again, what do we have? From this place to this place again, it got to 50% again. It did what? It moved up to break another structure. Thereabout. With just this simple explanation, we got a trade here. We got an entry here, right? Let's say we just target this high, the previous high. What do we have from here? We have what? We have 4.9 R, right? We move from here again to this high here, to the previous high, okay, we have 2.6 R. We didn't get a setup here. Remember, it does not come back to 50%, so we didn't get a setup. Here we got a setup again, right? We got a setup from here again, which was below the 50%. Then we have this. Again, we target this high here. So here we have what? We have 2% again, right? Again, I think this one also did 50% return. Yeah, 50% return. So which means we have a setup at this level again, 50% return at this level again. Okay, so we have another entry here. We target the previous high, and what again? We have 4.29. So this will be a winning trade. This will be a winning trade. This will be a winning trade, and this will be a winning trade. That was what the book is actually explaining to us. Breaking of structures to the upside. So if you look this in all direction now, this is what? This is an uptrend. If you put your trend line, you can see the market is actually going up. Now, you know, there is a particular place in the book that said low risk buy. At this place now, what does the book mean by low risk buy that I was telling you? We are buying at this zone with a low risk. Now, imagine somebody that does not understand the break of market structures, that just open his or her chart and discover, oh, the market is going up. He doesn't understand what it means by BMS. So because the market is going up, you just decide, oh, this market, especially when this kind of candle happens, you will be like, oh, this market is very strong, going up. Now, you started buying from here. After you started buying from here, look at what happened. The market only moved to this level and started returning back to this base before the move. Now, somebody that is buying at this zone is actually doing high risk buying, because before this person is going to break even back to this market, especially people that doesn't even use stop loss, the market will definitely be going against you to this level. Did you get it?
Yes.
The market is actually going against you to this level before it will now pick up back. Now, I am doing this now, but you that you have the understanding of market structure, when I'm doing this, you will not do this thing I'm doing with me. You will be waiting for this 50%. Now, let's assume I entered from here and I exit from here, and you enter from here and you exit from here. Look at the difference we have. You have 4.78%. Me, I have what? I have 1.3. I have 1.3. You have 4.7. Now, it's not even about the 1.3 or 4.7. Look at the drawdown I have incurred from here. Look at the drawdown before the market started picking up. I will not wait to this extent. Maybe I will have closed out my trade. When I see it's going against me, maybe I will have closed my trade at this point, thinking that the market has started selling, and I will do what? I will join sell again. Once I see this candle here again, I will join sell. Oh, the market is not buying again, the market is selling. Then I will start selling again only to get to this point, I will be so happy. Oh, the market has started going in my direction. And maybe I will be waiting to sell to here, only for the market to get here and started going up. And that is when you understand the break of market structure started buying from. I don't know if I'm making sense.
Yes. Yeah.
Fine. So back to the
Yes.
market structure. Once you understand where the market is actually breaking to, you will be able to trade in the direction of where the market is actually breaking to. So this is an example of uptrend that the book is talking about. So now let's go back to that book now. So from the book now, you can see the market is breaking structure to the upside, and is returning back to a low risk buy area where they are actually buying. So, which I have also shown you the example on a normal trading view charts now. So now this is the same thing we are still talking about, breaking structure to the upside. And you know, I told you that at a point in time, it will not respect this zone. And that is where we always have what we call change of character. We will still get to that. So let's keep this for now. Let's move to, so that is market structure in the up direction and in the down direction. So let's go to example of the market structure in a down direction, which the book does not give us example of it. But let's go to the chart and get example of it. Okay, fine. Let's use this level as our example. Let's use this zone as our example. If you look at the markets, we have this, 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 and we have this. Let's take this as example. Now, I'm sure you might be thinking that, okay, what about this, right?
Yes.
And this. Now, we will regard this as an internal structure.
Hello, boss.
Okay, Mr. K.
This is lower than
yeah.
this.
I saw that now.
Though this one is not lower than this.
Exactly. That's what I was about to explain.
Okay. All right.
This is not lower than this until this low is being taken before we have a complete structure. Mr. Utas, do you understand what I'm trying to say?
Yes,
This is,
I'm
yeah. So until this low is taken.
It's taken.
Yes. Until that low is taken before we have a break of market structure. So that's why I didn't consider this. I didn't consider this, and I didn't consider this as well. So this is a complete leg. This is a complete leg. So here that Mr. K is laying emphasis to. Now we have this, we have this, we have this, but this does not come. This has made this to be invalidated. So I will take this as a whole leg. I'll take this as a whole leg, just like the way I have this as well. Now, in case of a live trade, If this time finish, I'll send another one. In case of a live trade, Mr. K. Mr. K.
Boss. Yes, boss. Hello?
Are you with me?
Hello? I'm with you. I can hear you.
Yeah, you explained something about this Zoom the other time. So if this one finish, can you set up another one and send it to me?
Yes, yes.
So we won't have to wait for 5
10
minutes.
That's
Yeah,
true.
5 minutes or 10 minutes. So thank you. So we have this taken out. Okay. So in a normal sense, this is tradable as well. It's tradable. What we just need to do is from this to this, which we have this zone to trade, and our target will be to take out this. So, but after the market has occurred, let's say we just woke up and we look into our charts, I will be taking this as a whole leg. I will be taking this as a whole leg because when market was returning back, it liquidates all this and mitigates this. So it makes this a complete leg this way. So now let's look at this now. From this high to this low, the market returns back to above 50%. So we will be having a sell setup at this point. Okay? We'll be having a sell setup at this point, targeting that low, which is this. Okay? And immediately the market take out this low, what happened? The market returns back. Okay? Let's see where the market returns to and what happened again. So at this point, we have this high and we have this low. And what happened? Markets eventually returned back even above the 50%. But remember, the book says what? What does the book say? Let's go back to that book and see what the book says.
He said after the market break of market structure, the
Yeah,
price
we return back to 50%. Okay, yeah, this is where I want to take you to. He said the book says that the markets breaking swing high or swing low and respecting the swing high or swing low. Now, in this case, this is the swing high here. You see, when the market was going back, it did what? It respected this swing high. It does not take out this swing high. Despite the fact that the market did more than 50%, but yet it does not take out this swing high. So in cases like this, we might be having a sell setup somewhere here, okay, which we will be having a losing trade on this one. But again, we will still be having another entry here because the market has not taken out this swing high. Oh, yeah. So we'll be having another entry here again. So then which is going to be a winning because this is going to be our target. So now let's move to the next one, which is after the market breaks this structure again, it moves down here. We have this, 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 we have this. So once the market created this, and we started seeing the markets returning back up. So what do? We take our feed from here to here to here, right? So the market did what? Return above 50 as well. We'll still talk about this when we get to the to the aspect of Fibonacci. So the market returned back. You see, from this 50 to this zone, is a very good zone for us to sell. And from this 0 to this 50 is always regarded as a very good zone to buy. So always note that anything from here, we can always look for a sell setup. And anything from here, we can always look for a buy setup. A buy setup. Did you get the points now?
Yes.
So once the market got to this point, it started trading down again and did what? Break this structure again, which was the previous low. It broke this structure again. And after breaking this structure, it started making a wave back. So when it started making this wave, the next thing for us is to take our feet from here to here again. And started looking for opportunity to do what? To sell in all these zones. Started looking for opportunity to sell in all these zones. And our target is to do what? Once we get a sell setup, our take profit is to be below this line. And what actually happened when the market find is level from here, started doing what? Started trading down till we take out this low. Did you get the concept now?
Yes.
Yeah. So that is the concept the book is actually talking about. I'm going to beat you guys. That is the concept the book is actually talking about when it says breaking structures. So that's what I'm trying to explain. We always trade in the direction where the market is breaking to. So if you look at these charts now, irrespective of the strategy you are trading, okay, either SMC, either trend line, either mention it, either resistance and support, you must understand where the market is actually trading to. Is the market trading down or is trading up? If you cannot get that fact, whatever strategy you are using, you will just finding yourself in a very, very wrong trade. For instance, people that are using a trend line at this level now, okay, they will be having something like this. So, meaning that they will only be waiting for this market to come back towards their trend line. Once the market is getting towards their trend line, they can start looking for other setup or conferences they want to use to trade. It comes down again, it comes back towards the trend line. It comes back again, it comes back and even touch the trend line. Comes again. Now, at this level, people that are trading trend line and understand the market structure, they will know that once they are selling from here, okay, they are not going to quit the market until this level is taken out. If you don't understand that concept of break of market structure, at this level where the market started reversing, you can easily quit the trade and think it wants to come and break this trend line. But what happened again? It started coming down until it took out this low. So, as I said, irrespective of the strategy you are trading, you must understand the concept of break of market structure. That is just the number one thing to understand in Forex. That's why I started from that book. Okay, you know what? Okay, fine. He's recording now.
All right.
It's recording now.
So you have the control over the Zoom session as it were now.
Yes.
Okay. You want to go ahead?
Okay, fine. So then the next on the page is 1.3. 1.3. So any question on the structures?
So I think it's clear, but the only
It's
issue
clear.
is, so I mean, this is on a higher TF, right?
Yeah,
So
higher time
on
frame.
this higher TF now, I'm now asking, what happened to lower TF? Because
Okay.
inside this higher TF that we have, broadly marked out, movement happen on the lower TFs. What happened on on those other TFs? How do we manage
Okay.
those TFs within the bigger TF?
Okay, fine. On the lower time frame,
Yeah.
the same thing that occurs on higher time frame is the same thing that is occurring on higher time frame. The way we mark out the market structure on the higher time frame is the same thing we will mark it out on the lower time frame. The major thing is to understand market is breaking structure to this direction, Now, let me go into this. At the point where we understand that, we have this high and we have this low, okay, which is this. The recent video I sent to you this morning, okay, by the time you watch that video, you will understand some other things that we will still be talking about. At this point, I will be regarding this as my directional flow or expectational flow. I always use the word expectational flow. Now, this is where the market is presently, right? This is where the market is presently. We will make a replay now. Remember, this is 4 hours time frame. And this is where the market is presently. Now, let's mark out the inner structure. This is a complete leg. But in this now, we have some inner structures, and these are the inner structures. We have this, we have this. Right? We have this, we have this. We have this, we have this. We have this, right? We have this, we have this. We have this, we have this. We have this, right? Are you with me?
Yes, sir.
Okay. So at this point, what are we waiting for? We want to see the inner structures being taken out, be broken to the upside. So this is the recent one we have. Then we have this. Then we have this. We have this. We have this. These are the inner structures that the market is likely to break back as it's going up.
Recording in progress.
This is 4 hours time frame. We've analyzed our inner structures. It might not be so clear to you. Let's go to 1 hour and see what we analyze here. Did you see how clear it is on 1 hour?
Yes.
Okay, fine. Now, our overall direction is a down trend.
Sorry, sir, can you drop it? The way you drop it to 1, can you drop it like that? Let's see how it plays out. Maybe to 15 or 30.
Okay, fine. Let's go to 30 minutes. This is it on 30 minutes.
Okay.
Which is more clearer again. Even if you take it down to 15 minutes, you will still have this. What can actually happen again is you will be having another inner structures in them again. For example, look at this. Look at this zone. Look at this zone. What happened? This to this, right? To this and to this. To this one here. Right?
Yes.
And what happened from here? You know, this is the recent one. Right? This is the recent one. Once this one was taken out, we regard it as change of character. And we started looking for opportunity to do what? To buy. When this was also taken out, give us another confirmation. Okay?
Are we to do the fee from that point down so that it can be a low, a LRB?
So if we do our fib from here, if we do our fib from here, okay, to here.
Are we going to drop it from up down or from down up?
From down up. That's what I. So once this one was taken out, okay, this one is also taken out. We do our fib from here to here. You can see the market does not get back to the 50%. If you do from here to the first one,
except for this point.
If you do from here to the first one, okay, the market does not get to the 50%. But as the market proceeds, we started having this, right? This, right?
Yes.
This. Then we have this slight, maybe this might be as a result of news or whatever. We have this slight break here before up again. So now what I will say in essence is this. From here to here, okay, the market does not get back to this point. We don't have an entry, for example. Then the next one was from here to here, right? Then what happened? The market get back to this point and we have an entry, okay? Then what I was saying, from here to here again, the market moves even below the 50, but respected this low, and we have an entry. Then again, what happened? From here, what happened again? The market reversed back, even did below 50, but respected this low, and we have an entry from here, right? Then after having that entry, we have a slight shoot down again before the movement. So in cases like this, it is bound to happen that this trade will be a losing trade. Did you get it?
Yeah,
Do you
that's
understand
true.
that point?
That's true.
It's
Because of that spike.
That spike is definitely going to be a losing trade. So we can't run away from that. So after that, we have this, okay, and we have this. In fact, we have this, okay? Then what happened? If we take from here to here, the market did what? The market did to this level and started going in a direction before it changes this direction again to started going lower low. But you know, these are internal structures which we are trading in direction of the external, which is the higher time frame structures. You understand? So whatever we are doing on internal structure is just a temporary movement. It's just a temporary movement. So let's go back to the 1 hour time frame that we are trying to analyze from here. So I was saying to your question, I'm trying to answer your question now, that what are we going to do in internal structures? Because we've analyzed the external structures and we understand that. So we've analyzed the internal structure on 1 hour now. So what are we waiting for? We are waiting for the market to take out this to confirm to us that another set of internal structures is about to happen. So let's see what happens. Perfect. Oh, stop. At this point, this level was taken out. So which confirms to us that this market is going back in the correctional phase, right? So what we are supposed to do here is to take a feed from here to here, right? Now, it is cleared to us that anywhere from here, the market will be looking for opportunity to do what?
Sell.
To sell. Perfect. Anywhere from there, the market will be looking for opportunity to sell. And at the same time, sorry, we also can still be looking for opportunity to buy to any of these zones. So if we are looking for opportunity to buy to any of these zones, what are we going to do? Now we have this to here now, right? So can be looking for opportunity to buy. First, I'll be looking for somewhere around this zone to buy if the market gets there. It breaks that, right? So my next zone will definitely be here, this tail. I think you can see it.
Yes.
We are doing what? We are buying to 50 zone. Irrespective of our entry from here, you know we must have break even. Do you understand it now? Irrespective of our entry from here, we must have break even. Our target is somewhere here. So now we are in profit. Let's say we have break even at this point. So let's just use this marker here. Let's just highlight this here. So our target is still this 50% here. At this point, our take profit has been reached now, and the market has gotten to the 50% of the market has gotten to the 50%. So which means from any of these zones, we are looking for another internal structures that will be giving us something like this. To look for opportunity to sell from this zone here, from all this zone here. You know, we have entered into the zone already.
Yes.
Okay, fine. But we are looking for instance, we have 1, 2, 3. If this comes this way, then we are having a confirmation that the market is changing, and we have this, and we have this. We are having confirmation that the market is changing. But if this still goes above this, still the market has not ready to change. Did you see now? It goes above. Still going above. At this point, we are not looking for opportunity to buy, because buying at that zone is high risk. We are looking for opportunity to sell at that zone now. That's just what we are looking for at that zone. See, the market is still pushing high, and it's still in the same zone we are. You might be looking like, oh, since it's still pushing high, we should still be buying. Fine, you might be correct. But what we want to do is, we want to sell, we want to buy low and sell high. What do I always mean by buy low? We bought at this zone. We bought at this zone, which we buy low. We are able to come out at this zone. Now we are waiting to sell high. Another thing you can use this internal structure to do is to determine your take profit. For example, when this was taken out, that's another take profit. This is another take profit. This is another take profit. This is another take profit if you are a swing trader. Okay. Some people will still use as another take profit. Knowing fully that the market will respect this high. Knowing fully that the market will respect its high. Once the market break this high, then it's changing to up. It's not planning to come down yet. So the market is getting to the high where we are planning to sell high and buy low. So what is happening now? The market has started creating a lower low. Did you see it? The market has started creating a lower low.
Correct.
So we have this, we have this, we have this, we have this, we have this. Okay, we have this. Then we started having this now. Started having this now. So at this point now, we'll be looking for opportunity where the market will turn back and we'll be able to sell. Fine, good. So now we'll be having this swing high to this place. Okay, so we can have our first trial. We can have our first trial at this level the market is now. I have a stop loss here. This can be our first trial. And now for swing traders now, just the way we mark it when we are going up like this. 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 And remember, now let's go to 4 hours. Remember, we are expecting the market to do what now? To come and take out this low, this low. So let's say this market plays out. This is our target. At this point, we are looking for sell. Even if this one does not play out, we are still going to look for another sell at the top here. For example, so we are having this zone. If this does not play out, we'll be having this zone again to try from. Anything here, we are looking for sell. We are not looking for buy. We have this zone to try from again. Still this same target. Did you see what happened?
Yes. But you didn't get back to the second one. Maintain the first one.
Did you see what happened?
Hmm.
So what would have happened from here? 23 RR. 23 RR. So he didn't get back to this zone. If this zone has failed, we will have moved from here again until the market takes out this level before we can change our bias, until this level is being taken out, before we can change our bias. Before we can change our bias. And after this is taken out, okay, the next thing we will be looking for is what? Is opportunity to buy. How do we look for opportunity to buy from this zone again? We need to highlight our inner structures. You can go to 1 hour to do that if you feel comfortable in analyzing it on 1 hour. Then, what do we need to do? We need to understand that we need to understand this, the break of market structure. This is lower than this, right? Probably this. Okay, let's zoom it and see. Fine. Think we'll be taking this as well. This. So now, the market has started doing what? This. But first, let this be taken out. Okay, that's number 1. Number 2, we need to use our fib again and see where our 50% falls. and see where our 50% falls. From this swing to this swing. Or better still, because this is a complete swing, from this swing to this swing, we'll be looking for where our 50% falls. If we said we should use this, okay, fine, we can still use this as well. Okay, so meaning that we are actually working towards this zone to sell from again. Okay, so but pending that time, we want to see inner structures taken out and opportunity to go long. So you can see this is not taken out, right? And that's why we could not get a perfect entry at all. Could not get a perfect entry at all. So at this point, our fib has not gotten the right job for us to do. So now our 1, 2, 3 we change, because now we have this, we have this, we have this, and now we are having this. So this will be the next place we want the market to take out to confirm to us is going this way. So at this level now, we have this taken out now. So after this was taken out, then after this was taken out, okay, then we can now use our fee from here to here. From here to here. And what? Started looking for the 50% of this. So the 50% of this now is definitely somewhere here. But what happened? The market does not get there before it started going up. So now we need to start highlighting our inner structures here.
Shi da dadi wajen abba kai. Wajen abba ko wajen dadi? Wajen su dadi? Oh.
Did you get my point now? So we need to start highlighting the inner structures once we see the market creating higher highs, and we need to bring out our fee to know where the market is actually going to. So I think I've done justice to the smaller time frame structure as well. Mr. K?
Yes.
Okay, fine. So remembered now. So I'll start again. The ranging markets now, this is a perfect illustration of a ranging market. From December 27th to February 20, the market is just ranging between this high and this low. And in a perfect market, or as a very good trader, we need the market to break structures to actually understand the direction the market tends to move and how we can follow the market in its movements. So looking at this chart on 4 hours time frame, we have this high and we have this low. The market returning back gives a perfect entry. Now we are expecting the market to come and take out this low. Failure to take out this low, then we are expecting the market to take out this high. Now, the market got here, drops again, okay, moves up again, still protecting this high. Still protecting this high. This high is still not taking out. So we couldn't do anything. Coming down again, okay, still did not take out this or this. Before finally broke out of this level on the 20th of February. So from 27th of December till 20th of February, this particular pair was just ranging between this high 162.447 to 155.307. So for a smart money concept trader or somebody trading the trend line, irrespective of any strategy you are trading, it will be difficult for you to understand the direction the market wants to go, because we needed the market to break out of this ranging box, this consolidation market, before we can determine where the market is actually moving towards. This is just an example of a consolidation market. And immediately the market broke to this side, it started trending up to this zone. So which, if this zone holds, we should be expecting a drop probably to somewhere here before pushing up again. So this is just a very good example of a consolidation market or a ranging market, like stated in that book. So let's go to the book and continue the review of the book. So after that, then I said we should go to 4.1 of that book. And what is 4.1 of that book talking about? 4.1 of that book is talking about order block.
Order block.
Yes. It's talking about order block. Fine. So order blocks are candles where the market maker, in quotes, banks, place their position. Generally, the market returns to the candle and they are never violated if they are really order blocks. But I will still not want to accept the word they are never violated. They can always be violated. That is why the risk management is very, very important. There is no 100% setup anywhere like, oh, this setup, it is 100%. is not going to fail. There's nothing like that. So I will not want to take this word never violated. Or market returns back to the candle, okay? And that candle, the market can react from there and go in our direction. And again, the market can decide to violate it and goes opposite direction. So these candles, we identify them as the bullish order block and the bearish order block. And this happens after a break of market structure. Like you can see 4.1, it says the bullish order block is the last bearish candle before the bullish movement that breaks the market structure higher, presenting a possibility of holding the price when the price returns to it. And this is an example of the bullish order block. Now, once the market breaks to the upside, you know, we said the market will return back to 50%. It can be 50%, it can be more than 50%. So now, how do we determine where the market will return? That is the function of the order block. Because if you look at the charts, for instance, for example, we have a break of market structure here. This structure was breaking. We have our 1, 2, okay? Sorry. So we have our 1, 2, 3 here now. So we are trading between the 2 and 3. This 1, 2, the movement from 2 to 3 has taken out this 1. So now, what they are saying, we want to trade back down to this place. How do we figure out our order block? The book says what? The book says the bearish candle the book says for the bearish order block. Now that was the example we are trying to look. He said the bearish candle. Now we are talking about the bearish. That's the example on the chart. Now I want to find what the book says. It said the bearish order block is the last bullish candle. The last bullish candle before the movement. Now looking at this from here to here, where is the last bullish candle before the movement? Now, in this case, we have 2. Sorry. We have this, right? And again, just above it, we did what? We do have this again. Right? Okay. So which is telling us that the market can do what? Can return from this and can actually return from this. Now, looking at the both very well, they are very close to each other. They are very, very close to each other. For someone like me, this is a 4 hours chart. I can go to my 2 hours to see what is playing out on 2 hours. So on 2 hours, I have this. Again, on 1 hour, let's see what we have on 1 hour, because we need to always do with multiple time frame to see the high probability of the one that will definitely play out. So on this, we have multiple again. So let's go back to our 4 hours. We have this on 4 hours. Let's go to our daily. Because what we are doing is just a real live market now. Perfect. So on our daily now, let's go with our daily. The book says the last bullish candle before the movement that breaks the market. On the daily now, we have the last bullish candle to start from here. Okay? This is it. So, perfect. If you look at this now, this is the candle that broke this structure. The last bullish candle before the break of structure is what? Is this. Is this. Can you see the book?
Yes, sir, we can see.
Okay. He said,
Yes, boss.
okay, fine. He said, the bearish order block is the last bullish candle. Bullish candle is the buy candle before the bearish movement that breaks the market structure lower, presenting a high possibility of the holding price, of holding the price when it returns back to it. Now, when this happens, we have this. Now let's go back to the 4 hours. The daily has helped us to do what? To filter where our entry can probably start from, a high probability where our entry can actually start from. So this order block now is an order block coming from the daily. Is another block coming from the daily. This does not mean that we will be having the entry from here and having the stop loss from here. If you look at this, this is what? This is 117 pips. This is 117 pips, which it doesn't worth it. So, but we know that from this zone, the market will definitely return back from this zone. So what we can do is to go on a lower time frame, either 15 minutes or thereabouts. We'll still be talking about how to enter from a lower time frame, but don't let me merge everything together for now. So now we have known that the market has high probability of returning back from here. So from here, we'll be looking for our entry. But nevertheless, let's just say we have our entry here and we'll be having our stop loss above this. Okay, and our target is going to be where? This is where we are actually targeting in a normal condition, in a normal market condition. So what do we have? Did you see? The market returns back to this. That's what the book is actually saying. That's what the book is actually saying here when it says the market structure lower, presenting high possibility of holding the price when the price return to it. When the price return to it. Did you see how they set their set limits? They have their sell limit here. This is the last bullish candle here that buys before this structure was taken out. Then what? They have their set limits here and they have their SL here, just the way we have it here as well. Just the way we have it here. We have our sell limit here and we have our SL just above it. And we are having our target. And we are having our target to be what? To be the next break of market structure, which is this one. We are having our target to be here, just like this. So we are having our target to be here. Sorry, this has been taken out. So this is the current low. So the market is returning back here, and our take profit is going to be here, just the way we have it in the example we are having on the chart as well, which is this. So when markets return back here, we are in this trade already, and we are expecting it to do what? To actually play out. It takes a while, the markets started dropping. In a normal scenario, when the market has taken out this low, we adjust our stop loss here. We adjust our stop loss here. In case the market refuse to take out this and is changing its direction, we won't be affected by losses. We have protected our capital from here. So we have this. And look at what happens now. Did you see what happened? The market refused to take out this low. It refused to take out this low and what? And return back to this zone. Now, even if we didn't protect our capital, still doesn't take us out. Still doesn't take us out. Okay. We're still expecting this low to be taken in a perfect market condition. But in this case, the opposite side is what happened, because the market eventually moved from the market that has a direction to a ranging market, which was the last example I showed you. So if you look at what plays from here now, you see the market started ranging between these 2 and 3, this second point and this third point that we highlighted. Now, if you look between here, between our second point and our third point, the market is just moving wee woo from here. In a perfect market, this is expected to be taken out. Let's assume this market that comes down here took out this, okay? This level will have been another entry for us. Okay, so it will have been this move here, this move back here, and this move here again. That is a perfect trending market, bearish trend. You understand? But in this case, the market falls from a trending market to a ranging market, And what happens? We are in between this range for a longer period of December to what? To February, before we eventually got a breakout in February. So, for example, in this, we will have been taken out on break even if we traded with the daily order block. But if we traded with the daily order block, but a lower time frame entry, what we have as 1 to 4 might be ending up in 1 to 20, something or thereabouts, which we will have locked a lot of a very reasonable percentage before the reversal. So that's an example of a ranging market. So I think we'll be stopping at this point today. We've treated 4.1 of that book. We've treated 4.1 of that book. So tomorrow again, I will create a class tomorrow again. We'll be able to talk about the bullish order block as well. We'll talk about the bearish. We'll be able to talk about the bullish order block. Then we will go to the videos again. I will explain some things on the videos again. Then for tomorrow, we'll talk about bullish order block. We go into the videos. Then I'll open the line for questions. And I'll be able to understand that you also understand what I've been talking about. So is there a question for today?
Okay, thank you, sir, for this wonderful session. For now, can you send the recording of today's session?
Yeah, definitely. I will do the sending of I'll send the recording.
Okay.
Mr. K.
Yes, boss.
Did I do the justice very well?
I've sent it to you on your
Okay.
Telegram. Yes,
Okay.
you did. You did.
Okay. So you will be preparing your question for tomorrow, right?
Yes, no problem.
All right. All right.
At least you have 2 recordings. I've sent my own to you.
Yeah, so we have
the
3
first
now.
one and the second and this third one.
Yeah, we have 3
Yes.
recordings now. So I will see how I can edit it and bring everything together. So it will be in one length.
Okay.
It will be in one length.
Okay, that would be very good.
I'll try to do that. I'll try to do that.
Thanks, boss.
All right, you're welcome. Thank you so much, Mr. Ukaz and Mr. Kayode.